As the yield on the benchmark 10-year Treasury has pulled back from 3%, we've gotten a bit of a bounce in the utilities. It's a classic group of dividend stocks that tend to be very sensitive to interest rates. So what do you do with a high-quality utility here, like Dominion Energy? Here's a company that's a major play on power generation and distribution. And when Dominion reported last week, the company gave you some solid results. Even though the revenues came in a tad light, they delivered a terrific 10-cent earnings beat off of a $1.04 basis. Even better, it looks like the regulators are falling in line when it comes to Dominion's acquisition of the beleaguered SCANA, a utility based in Georgia and South Carolina. You know, I'm in favor of, because I think the merger is going to bring out a lot of value. But thanks to this relentless rise of interest rates earlier this year and a new capital raise that took some by surprise, Dominion stock is down nearly 20% for 2018. That's a big decline for this stock. The stock sports a 5% yield now. I think it's pretty attractive. Let's check in with Tom Farrell, the chairman and CEO of Dominion Energy, get a better sense of how his company's doing. Mr. Farrell, welcome back to Mad Money.
Jim, nice to see you.
All right, well, first time I want to congratulate you because you did your incredible natural gas project on time. And I just want viewers to know how it's doing because it was a monster endeavor. And I've seen very few people not have big cost overruns. You didn't on this huge project.
Talking about Cove Point, our LNG export facility, it came in 3 years of construction, came in on time and on a budget of $4.1 billion. Extraordinary amount of work done over that period of time. 3 years of permitting, 3 years of construction, but came in on time and on budget. We're very pleased. And ships have been on their way already to both India and Japan under 20-year long-term capacity payments.
Okay, so let's talk about the capital raise you did. I know a lot of people felt that, well, there was a period when you could do these master limited partnerships were so tax advantaged for wealthy individuals that you'd be able to what's known as drop down one. You did that and then be able to sell some stock, be able to raise capital. But the markets were unforgiving and remain unforgiving for these master limited partnerships. So do you think you've raised enough capital in the other way that you did it with an equity offering? Is that now behind you and we don't have to worry about more stock?
No more stock through at least 2020. We are looking at an asset sale to make up the balance we need between $1 billion and $1.5 billion. It has to do with some complicated rulings out of, excuse me, the Federal Energy Regulatory Commission that we and a lot of others are asking them to rethink. But that's what caused the significant decline in the stock. But we've taken care of our financing needs for the next 3 years.
Well, let's talk about
subject to the sale.
Thank you. The FERC ruling was a surprise. TC Pipelines was actually a pretty good company today. Slashed their distribution 35%, again, because of FERC. You know, FERC was supposed to be, let's say, more pipeline friendly under this new president. What happened? And do you really think there is a chance that FERC can start changing his mind? Because this has really hurt the entire effort to be able to get oil and natural gas to market.
It's going to make it very, very difficult to finance a lot of gas infrastructure. They reversed a policy that had been in place for almost 40 years with almost no notice. So it's something that everybody a lot of people have pushed or asked them to reconsider. I think there's a very significant chance they will reconsider. How they will actually rule during that part of the process, I don't know. But we were not willing to wait for that. That's why we went ahead with our secondary plan, which we've put in place that you referred to a minute ago.
Okay, I want to talk about...
equity issuances are behind us.
Okay, boy, I sure hope so, because it really is very discouraging for a lot of people. Can you talk about your most recent efforts to do renewables? Because it seems like that the renewables have dropped in price where they're very competitive to even natural gas.
We've installed over 2,000 megawatts of solar nationwide in the last 4 years. Nationwide's not quite nationwide, but from the West Coast, in the middle part of the country, and the East Coast. We now have solar farms in 9 states. We have wind farms in 2 states. We'll be doing a lot more solar over the next few years. We're looking at an offshore wind farm that would be part of our regulated asset base in Virginia. When you build a lot of renewables, you need more pipeline infrastructure and gas-fired power plants to back up the solar or wind, because obviously it's an intermittent source of power. So you need a reliable backup source, and for that you need more gas infrastructure.
All right, well, Tom, how much of this is driven by customers? You know, when I speak to a lot of companies, particularly companies like Google, like an Amazon, they want no footprint. They want to have a renewable footprint. They want their utilities to do it. They certainly tell me coal is dead. Is that really the new narrative for the utility business?
We hear a lot of that from our large customers. As we've discussed before, Jim, over half of the internet traffic in the United States routes through our electric service territory. A lot of that has to do with our inexpensive rates that we have, the low rates we have. It's a lot of fiber infrastructure. We've had a lot of negotiations with large customers like that to provide them all solar for their needs. We're going to be a new, very large Facebook data center here in Virginia. Microsoft, we have contracts with. Amazon, we have contracts with. All for data centers to provide renewable power as their source of power.
Well, I got to tell you, Tom, it's ridiculous your stock's down as much as it is. 5% yield seems great for me. You have been with us the whole way, and I like it. Thank you so much to Tom Farrell, Chairman and CEO of Dominion Energy. Good to see you, sir.
You too, Jim.
Stock's too cheap. Got good yield. Mad Money's back there. Good break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.